Finding the best way of how to calculate PIPS when it comes to synthetic trading has been one of the major problems for most traders in the synthetic trading industry. So I decided that, you know what, I want to solve that problem. It took me weeks before I could break or understand what was going on because currently Derive did some update that will be messing up a lot of traders' chart. They'll be wondering if the market is being manipulative or not. And Derive did some update with their lot size, which affected their pips movements and a whole lot. I'll be sharing in this tutorial today. So if you are watching this from anywhere around the world, I would love you all to please hit the subscription button, comment, drop comments, ask me questions in the comment section. I'll be happy and willing to assist you anywhere I can. So let's just get right into it. So today I'll be talking about the best PIPS calculation method for your favorite synthetic pairs. And before we go right into it, I would love to ask, are you a beginner or intermediate trader who keeps getting it wrong several times whenever they hit the buy or sell trade on their favorite synthetic pairs and you do not understand how the synthetic trading market works? Well, this tutorial we're about to head into is for you. And also, I also want to ask, are you familiar with these things like consistent blend of your synthetic accounts, live accounts? You do not have an effective or successful trading strategy when it comes to synthetic trading. You're having struggles with growing small amount accounts to a large account, and then you do not know how to calculate pips or how the pairs behave, how to accomplish high pips targets, and how to get high probability setups while trading synthetic pairs. Well, I think you should not leave this tutorial and you should stick with it because I'll be breaking down some few tips and some few things that will be helping you out in your synthetic trading journey as a beginner or someone who is just purely new to the industry and want to check out things. And before we go to that, I need to introduce myself. Yeah, very important. My name is Adeline. I'm a professional trader who specializes in both forex market and synthetic trading markets. I also do day trading and swing trading for both markets. I'm a founder of ADDY FX Academy. We have trained over 200 students using a simple trading strategy, which we have moved them from beginners to advanced professional traders. And trust me, they are profitable. I won't say 100% profitable, but I would say 90% profitable with whatever I've taught them. Are there losses when it comes to trading? Yes, people lose money. I lose money. My students lose money. We all lose money, but doesn't mean that our losses are higher than our wins. One thing traders need to understand is that you are going to lose money one way or the other, but your wins need to be higher than your losses. I swing trade, which makes it very easy for me to have lower losses and more wins because when it comes to swing trading, I pay attention to what is necessary and I leave what is not unnecessary. I don't like flipping all of that or just trying to make quick money, quick bucks. I am patient with the chart and with the market. So here's what some of my students have said so far. Hello, Coach Adeline. Coach Addy, good afternoon. Hope you are good. I want to use the opportunity to thank you for your FX knowledge. I've learned so much and made good profits implementing what you teach since I got to the academy. Thank you for introducing me to your FX Academy. Another one used the same strategy I taught them to trade I said boom and crash, to trade power 200 and Swift on Quaco Broker. I don't think Quaco Broker currently has now, but when it came up, there were easy strategies to use to make so much money. And one of my students made 500 to 8K USD trading the markets with what strategy I taught them. Now, let me head straight into what synthetic trading market is all about. Synthetic indices are distinct benchmarks that replicate the volatility and liquidity risks observed in the real world financial markets. These indices can be traded round the clock every day of the year, and they rely on cryptographical secure random numbers generators that undergoes third-party audits. Now, one thing about the synthetic market is that it is just a replica of the forex trading market. Now, here's the sweet part. It is not a market that has been controlled by news or manipulations or that has been controlled by economic data or physical buying and selling. Because in the forex world, what you are trading is a physical market. Do you get? You are looking at the analysis and what is going to happen. You can easily predict this is going to happen. But when it's buying and selling between currencies, you are seeing the reflection on the charts. You are seeing what is going on. So there is economic data, there is news, there's a whole lot of things that manipulate these banks. the forex trading market. But in synthetic market, we don't have that. Synthetic market is just on its own. It's an individual market. But are there manipulations in synthetic market? I would say they are. The only person that can manipulate the synthetic market in terms of liquidity providers are the broker. The broker are the ones who provide liquidity in the market. They either make it go in your favor or against you. Do you understand? But there's nothing like buying or selling in VIX. That's why we have a whole lot of peers and synthetic markets. And these peers, one thing most people don't understand is this: when it comes to synthetic, all the peers are not the same. That is why when you are carrying a strategy from Forex and trying to implement it in the synthetic market, you will keep on losing money because they are not the same. Do you get? The only thing that's just the same is that they have chart patterns, we have candlesticks, we have graphical informations about it, but there are so many things that are really not the same when it comes to Forex. The charts, everything, they just copied the forex trading market and gave you a chart. The ref has its ways of manipulating. But if you are not smart enough, you will keep on going to derive and then they'll keep on manipulating you with the way they can because it's only the derive that literally offers VIX 75, VIX 100, VIX 25, VIX 50, VIX 10, jump 10, crash, boom, range and break. But let me tell you something. All these pairs, they are being manipulated in different ways. Now, boom and crash has what we call spikes. Another secret I'm going to drop here is that if you trade trend, it will be so much sweeter for you to understand how the spikes and boom and crash move. Yes, that's another thing. And in boom and crash, the spikes do not respect stop loss. Just the same way in some brokers, like for example, when news happens and there's a spike in the news, it doesn't respect your stop loss. It's the same thing with boom and crash. It does not respect stop loss. Wherever the spike stop, that's where it's going to stop. You get my point? And the same thing when you go to the velocity 100. Velocity 100 moves like gold. It moves very fast because the pips movement is kind of different, which I'm going to be explaining very soon. They have different all pairs move differently. And then you see pro traders showing you MT5. The reason why they use MT5 broker is that MT5 gives you a whole lot to trade with. You see market differently. Currently now, the right trading view, they change the look of the chart. They remove wicks, so you can't even see the full body of the candle anymore. You have to use the MT5 to check out some things. The MT5 desktop mode to check out some things because to help you get more and more, see the market differently and cool. But the only thing I would say is that you need both the MT5 desktop and you need the derived trading view because you have to pick out when it comes to setting out your take profits, your stop loss. It is easier done on Derive lately. It's easier done on Derive trading view now. All those calculations you will go and do on MT5, and you will mark entry, you will mark this, then you will not go and divide it by the point value on MT5. My love, my sweetheart, you are going to get confused and you are not going to get it right. I have was doing that method before, but I realized that it wasn't just balancing. When the broker actually changes something in the market, you think you are wrong. Your setup or strategy is not working. But the thing is, there are some pairs you can't trade with minimum of $5. I was telling someone yesterday, they said because 5 is not a volatile pair. It's a least volatile pair. But it was I know it's volatile pair. Someone said it's a least volatile pair because that is a market that allows you to trade the minimum of $5, the minimum of $1, or in fact 0.5. You can open position with 675. It will not easily blow up your small accounts. I tell people if you have small account, focus on the least volatile pair. If 75 is a least volatile pair. The ones that are very volatile, VIX 100, I think VIX 50, boom and crash, anything boom and crash, they're crazy. They are very, very, very crazy. Do you get my point? And when you're talking about velocity rates and all of that, all those numbers you are seeing 25, 10, they are in accordance with their velocity rate. But that doesn't mean that they are that volatile because of the numbers you are seeing. 75 is going to be higher than 25. No. So the broker makes you believe that by the numbers of the numbers of this index is by their volatility rate, but no, it's not like that. Do you get? When we move on to the next session, which we are going to do in the next 1 minute, you are going to see why I said that you need to focus on trading VIX 75. Because when it comes to their PIPS movement, they are totally different. Some peers will give you like, you need, if you are one people give you $10, some will give you $1, some will give you 25 USD, some will give you just one pip movement. One pip will give you 2.5. We give you 2.5. So that's why I'm saying stick with 75 if you have a very small account. Many people do not talk about this at all. So now let's get right into the main course of this video. That is how to easily calculate your pips without having to stress yourself with MT5 and going and doing mathematics with your calculator and dividing. No, this is very easy. Now the point value of each pair is equals to 1 pip. The point value of each pairs is equals to 1 pip. Now, each pairs have different point value, which makes them less or more volatile trading pairs. Also, due to different point value per pips, 1 pip can be 1 USD. Now, another pip again, another pair can have 2.5. Another pair can have what, 10 USD per 1 pip. And this is why it is not advisable to start trading pairs or derived with a minimum of $5. Only pair you can trade with such amount is VIX 75 because it's the only pair, it is one of the only pairs that 1 pip is equals to 1 USD. And it is the only pair, I think VIX 100, 1 second or so, I'm not really sure, can allow you open below 1 USD. The minimum deposit on Derive is 5 USD. Please don't get me wrong. The minimum deposit on Derive is currently 5 USD. It's currently 5 USD, right? But for you to open position, some brokers, some pairs don't allow you open below 5 USD. Some pairs will allow you open below 5 USD. Some pairs don't even allow you open below 10 USD for call. 1 pip is just your $10 has gone. So this is why I said you need to sit down with 75. And 5 is the least. For me, it's the least, it's the smoothest, it's the sweetest. It might take you time to make money, but if you know how to swing trade, baby, if you know how to swing trade with synthetic, you will make good money. Some people know how to flip, but me, I don't even like flipping. I like swinging or probably day trading more often. But I focus on swinging because if I know where market is heading to, I can just hold that trade and I will make the same amount of money. Somebody will flip it and see blow account before even making money. I will make more than that because I know where the market is heading to. I'm patient with the market. I'm not rushing. I'm not trying to do about buy billions of cars tomorrow. I'm okay. I know my trading identity. So you have to know who you are when it comes to trading. You have to know what's up. Don't just try to deposit $10. I want to flip to $100 because somebody because you don't know what that person must have done. You don't know if that person is even posting a fake screenshot. You need to understand your peer. You see many people trading the VIX 5 and they're making lots of money with VIX 5. Why? It's the least volatile pair. Very least. You can't easily blow up your accounts or else you are using a wrong setup. Or maybe a setup you used was like a wrong setup, didn't go in your favor. Then you can easily blow up your account, but I don't even think you can. Now head up to calculating. This pair is VIX 100. Sorry, it's not showing clearly, but this is VIX 100 pair. And now when I'm going to say something, I want to show you something. When you go on Derive right now, I don't know if you are watching, if you are going to be opening your Derive, but I will advise opening your Derive while watching this particular part. You can pause this video, quickly go and go on your Derive trading view and open your chart and look for long position or short position. You can look for anyone and then practice what I'm about to teach you with me, along with me, so you can understand it better. You can do it later, anyways. Now, what I'm going to say here is this: anything you see target, you see stop. Target is take profits. Stop is stop loss. Stop is stop loss. Now you see risk to reward is showing you 4.1. That is 4.16 ratio 1, right? It's because of, if you look at this here, your stop loss, the difference between your stop loss and your take profit is a 4 ratio 1 or 1 ratio 4, whatever they call it. Now, since we're talking about point value, let me just head up to explain something here. Now the point value I'm talking about VIX 100 is 5, number 5, just 5. The point value is 5 points. The point value in VIX 75 is 1,000 points. We are comparing these two pairs, but before we do full time calculation, I want to explain something. That's why I have to come here to pick these particular things. The point value is 1,000 points. The point value of VIX 100 is 500. Let's go back. Now, when we're talking about point values, look at this TP here. The point value is indicating your PEEP. 5 points on VIX 75 is one PEEP. 1,000 points, sorry, 5 points on VIX 100. 5 points on VIX 100 is one PEEP. 5 points on VIX 75 does not amount to anything. 1,000 points on VIX 75. 1,000 points on VIX 75 is one PEEP. Now, when we want to calculate our peak movement on derive, looking at targets, right? We're going to use targets for our take profit section here. Looking at 655.5198. If your point value of the pair you are currently trading does not have a decimal point, you have no business adding the point value to it, adding the decimal point to it when you want to calculate your pips. There are tools that you can use. We have synthetic tool calculator, synthetic pips calculator out there, but Derive recently launched their own, which makes it super easy and straightforward. If you understand this concept, it is going to be super easy for you. You don't even need to go and be using MT5 mathematics. And this is something most traders do not even have on YouTube. They don't even explain it the way I've explained this. So now, since VIX 100 is 5 points is one pip, I have no business in counting 0.519. My business goes straight to counting 665. It means VIX 100 has given me 665 pips move because my point value is only 5. So I cannot count 0.00 because it does not have a decimal point. If you go on VIX 75 index pair right now, you are going to see 2,000 something something, or maybe in your take profit or in your SL, you're going to see 2,000 something something, 5,000 something something point something something. You have no business calculating the decimal points. That 5,000 you are seeing is equals to 5 pips because 1,000 points is equals to 1 pip. So indirectly, Derive is using the point value of each pair as their pip calculators. So it means that this here is 655 points. So 5 points of 5 points, right? 5 points is equals to 1 pip. So that means 600 this is 665 people is equals to what? 665 points. It's just it. It's just it. You don't have no business in doing mathematics. The same thing here. The stop loss is 157 57 points. The decimal points cannot be added. I'm repeating it. Do not add the decimal points. Only if the synthetic indices pair you have or you are trading has a decimal point in their point value, that is when you will add the decimal point. If the decimal point is 0.012, you will go on derive and count the beginning plus the decimal point 0.012. That is what you're going to be using. Nothing else. That is what you're going to be using. So now, why VIX 75? Let's compare VIX 100 and VIX 75. I've explained how to better understand the pips with derived trading view, right? I hope you guys understood it. Please practice it. While I'm teaching you, practice it. You will see results. Practice it. It will help you very well in your risk management and how to minimize your losses. Now, calculation strategy. So what most people do is they'll multiply point value times lot size times the contract size. That is the amount they are trading in their account to know how much will be their estimated amount. But for me, I don't add how much. I don't do the lot size because I want to calculate how much I'm risking, how much I'm willing to lose, how much I'm willing to make. just an estimated amount, so I can know what I'm doing. And when I have that mathematics up there, I will just go with it. Now, the point value, like I said earlier, of this 100 is 5. Point value for VIX 75 is 1000. Here is the lot sizes. The lot size for VIX 75, the new lot size, VIX 100, sorry, the new one is zero point 0.5. The new lot size of VIX 75 is 0.001. That's not even, that's like still the same. They didn't change it. But they changed VIX 100. VIX 100 before was zero point 0.2, but they currently changed it to zero point 0.5. So now I'm going to multiply VIX 100 and do what? The point value multiplied by the lot size. Zero point 0.5 multiplied by what? By 5. Point value is equals to what? 2.5 per 1 pip. VIX 75 0.001 times 1000 is equals to what? 1 USD per 1 pip. This is telling you that you do not need to carry $5 into VIX 100, because 1 pip, your account is gone. Just 1 pip, 2 pip, pew, your account is gone with $5. But VIX 75, your account is not gone. You know what you're doing, and it takes 1,000 pips before your account will even blow. 1,000 pip move for 1,000 pip, sorry, 1,000 points is 1 pip. So you need 1,000 points move before your account will even hit 1 USD loss. So now, for another one, once you are done with your calculation, right, and you've gone to derive, picked out, done your multiplication table with your lot size, with your calculator, and gotten everything you need to do, another confirmation of what I'm trying to teach you is your MT5 app. To confirm your calculation, go to your Derive MT5 app, the one you download from Derive on your phone. Make sure it is linked to your MT5 Derive account, your live trading account. Then you tap on your TP or SL, maybe you set limit or you've taken a trade. Now, this image I'm about to show you, my next post, will show you what I'm trying to say. It will show you how much you're willing to lose, how much you're going to make per the pips move in terms of in form of your point value. So from now on, you don't need to be dividing on MT5 desktop version. And you mark here, you go and get that cross sign and be marking left and right. You don't need to do that anymore. Derive has solved that major problem for you. So this is what I'm trying to say. This was one of my students' account when I was teaching them their pips, and I was like, take a trade and have your estimated TPs and all of that. And he did that. He sent me his question. I was like, this is what I'm trying to tell you. If you know what you're doing, when you want to flip, you have an estimated, okay, this is how much I want to fix, this is how many positions I want to enter. If I open to some position, this is how much I'm likely to make. You are calculating your money and calculating your loss. So you know if my market hits SA, this is how much I will lose depending on how many positions I'm opening. Some people will risk everything amount they're willing to blow up their account. Why? Because they have more than enough. But if you don't have more than enough, you have to calculate your risk, right? So here it's showing me now that this is VIX 75. So it's showing me 19919221116 points. This is indirectly 19 pips. Because if you go on Derive, it's showing 19,000 something something. So when you see 19,000 something something points, 1 6, that what showed us on Derive. It is 19 pips. Now this is 2,004,8309. There will be decimal point between the 309 on Derive Trading View, which we saw. This is 2 pips. Now, because we doubled our lot size 0.002, it gave us a risk of $4, almost $5. And he gave us a risk of what? 38.44 USD. So you don't have to stress yourself. This is your pips value. You are multiplying this by this to get this. Multiplying this by this. You're multiplying the points by your lot size, the points by your lot size to get the estimated profit. TP 38.44 multiplied, you multiply this 1922 11.6, like 11.6 points times your lot size, you are getting this. The same thing with your stop loss. Multiply the points by your lot size, you get the 4.91. So Derive launched their tools, Derive Pips calculation. As I'm making this video, the tool is currently having some website glitch. So I'll be adding another extra link to another tool you can use in the description section below so that you can get access to it and practice. This is will help you in managing your risk properly and all stuff like that. So this is what my students have to say after I've taught them and co. One was like, I've been killing myself on FX. I'm not sure I'm ever going back there again because she learned how to swing trade and everything I taught her. She realized that market was not manipulative at all. Kill that belief that synthetic market is crazy, manipulative, is this. Kill that motherfucking belief because it is not, baby. It is very sweet, it's easy. It will take you a lot of time to understand, but once you can crack the code of sync trading, you have gone a long way. This is another of my students and see what he has to say. Thank you so much. I now know how to calculate pips on synthetics so easily without stress. After a wonderful section with you, another student of mine who was swing trading as well. And here is we've come to the end of our classes. If you stayed behind, hopefully you are going to be getting access to the free bonuses. I said I was going to drop. I was going to give you bonuses. Yeah, I have some bonuses for you. And I'm not even use the word bonuses. I would say I have some gift for you if you stay till the end of this tutorial. We're heading straight back into what I have for you guys. For those of you who have been messaging me, I'm having problems with this, I don't understand what synthetic is all about, blah blah blah. I have a synthetic trading guide for you, and I will teach you everything you need to know as a pretty much newbie and a beginner into the market. I explained the easy strategies that will help you stay profitable in trading synthetic. I also explained everything that you need to know about how the market works and certain pairs and what to do, what not to do in synthetic markets in this synthetic trading guide. And you get free access to my free Telegram community where we have lots of tutorials there, video tutorials that you can always watch anytime, any day, from ICT to SMC to retail. They're over there. You can also check out my YouTube channel. I have some free tutorial beginner courses that will also help you as a newbie in the industry when it comes to synthetic or any other industry. These are easy tips, and I hope they will help you. If you want to get access to this, the link to getting this guide is going to be in the description. The normal original price for this trading guide is actually $25. Sorry, 25,000 naira, but we're giving that for 80% off, and you'll be getting it for 5,000 naira. So if you are interested in this, please check out the description section underneath this video right now. You're going to be seeing the link to access this particular trading guide. I can't wait to hear from you guys. I can't wait to have your feedback and all of that. Another one that I have for you is this. For those of you that might be interested in getting into my mentorship, want to go on a one-on-one journey with me where I will teach you everything you need to know and pour into you, I have a 20% off currently on all my mentorships. There are only two packages. I have a 6 weeks one-on-one mentorship training, which is currently going for $100, and I have another one currently going for $200. I took out 20% off for anybody who wants to get it. I understand what is really going on in the country right now. It's not really easy here and there. And I allow people to pay twice. So you can actually pay in installments. And once payment is complete to get into the training. And this training includes you have live access to my community, training materials, live recordings of previous and recent classes. And we can always have meetings. Please, one thing about my mentorship is that you can always reach out to me anytime, any day. Ma, I'm not understanding this. Let me know. I'm very open with my student. Whatever knowledge I'm pointing to you, I always want to see your result. I always love when people come back to tell me, I studied this, so this is the problem I'm having. And I always reach out to my students. So if you're interested in this and you want to jump on it, feel free to hit me up. My socials are in the description below. Thank you, and don't forget to subscribe to this channel because we have lots more coming your way.